7 ways small businesses bleed money. We have here today Laura Goodman, partner, CPA, FGMK, and Adam Radulovic, CEO, XLnet. So I was having a lunch with a friend of mine, insurance broker, and he brought one of his friends as well, downtown Chicago. We ordered our meals, appetizers came out, and started having a friendly conversation. My friend's buddy, knowing that I'm in technology, thought he'd share a fun story. He said he was having difficulty sending money to his largest vendor, a warehouse in China, and it's been going for a couple weeks. And sounded like an interesting story. So both then my friend, insurance broker, and I started asking questions. He said, "Well, there's a wire transfer I've been trying to send, and it's been challenging because our partner got a new bank. And so we've been trying to get the money, and he has confirmed that he hasn't gotten it, and so we've sent it again." And I asked, "Well, what happened when you talked to him on the phone? What did he tell you about the wire transfers?" And the response I got back was, "Well, our partner doesn't speak English really well, but on Monday, the following week, I've scheduled a call with his daughter so she can translate some what's happening." And my face just turned white, and I looked at him and said, "I think you just wired $525,000 to a criminal." He kind of paused, thought about it, and left lunch immediately. Some lessons learned. It did end up to be a fraudulent transfer. First step, you have to voice verify. Even if this partner's somebody that you've known for a decade and it comes from their email and it sounds, tone of the email like your partner, you must voice verify when bank information is changed. And as a second step, always have 2-party authorizations for new wire location or amounts over a set threshold.
Now, another thing to watch for when you're trying to control the cash flow in your business is how can you incentivize your staff so that you can get the maximum profitability out of them? There's a few different ways to create incentive plans so that you can make sure that you're getting as much revenue as possible in at a reasonable cost. First thing that I like to do with my clients is put in place a productivity-based formula. If it's something like a professional services business, for example, a medical practice, incentivizing the employed doctors for collections, good charting, anything that they do that can help bring in more revenue based on the services they're providing. And they get a bonus based on how productive they are and how profitable they are for the practice. Another thing you can do is individual profitability incentives. You can have a compensation formula for your higher level employees that can reward based on hours, based on good behavior, based on showing up on time, all sorts of different metrics that will overall increase the profitability and productivity of your business. You can also then go to gamification, which is incentivizing the whole company to work together with some kind of a bonus or reward for increasing productivity, increasing collections, overall increasing productivity. An example I have of this is I have a medical practice client that wasn't collecting copays when people came in to see the doctor. And that's a way that a lot of medical practices can really bleed cash. Because once you leave the office and you've seen the doctor, the chance of collecting from someone is just really declining, and it costs you money to have people work the claims and work the collections and make phone calls and send notices. What we've done is set up a contest for the front desk staff. And if the team as a whole collected 90% of what should have been collected, there was a party for the whole group, or we gave out gift cards, Target gift cards to everyone. Sometimes just a little recognition and a little bit of a financial reward can really, really improve your financial situation.
So I got a funny story to add to that. As you might know, we're an outsourced IT department, so we have a service desk. And anytime we do service, we definitely want to tell the client that received the service what we did. So we call it the closing of the ticket. And we had a top performer on the service desk, this was years ago, and he would just refuse to write comments and explain what he did. He did great work. Clients were happy that the work was done and that they got what they asked for, but they were always curious, well, what did you have to do for that? And give me some clarity so maybe that next time I can do it myself. And he just never took the time and said, I'm just too busy to get that done. And it got to the point, and I loved the guy, and I thought it was great. And we spent some time. I'm like, hey, this is a big problem. You got to start doing this. Otherwise, it kind of puts your role in jeopardy. And he still didn't change. We then implemented a gamification system, which just as a concept, all gamification means is you make it a game to do something necessary in the business. You make it fun. So we made a contest, and the contest was anyone for the week on the service desk that 100% of their service requests are closed appropriately with background on what was done, received 2,500 points. And that's equivalent to about $25. Guess what happened after the first week? He won the contest, did 100% of his tickets with a closing note. And I asked him, why did you do this for $25? He was making, at that point, around $70,000 a year. You put your $70,000 job at risk, yet you did this contest for $25. Explain it to me. I said, I don't know, Adam. It was just fun. Now we're all probably getting used to the new COVID normal, working from home. And there's a couple of things to consider. As I've talked to clients, I've seen some that get challenged with maintaining productivity, and then others that don't. And so we've identified a couple of things that the ones that have higher productivity have put in place. And it really is three. The first, which COVID initially struck last year in 2020, most didn't, is just a comfortable workspace. Whether it's enough monitors, a quiet area, somewhere where this is a designated spot for work. The employers can definitely assist in providing necessary equipment, and it's not that expensive in order just to have a separate workspace when working from home. Now, second, there's actually a vendor, so I'll explain what they do. Doing engagement assessments. The concept here is there's a 6-minute survey that your staff would take once every 90 days. It's anonymous. There's 24 different questions, different dimensions, and it'll give you feedback to know where the hot spots are where people are finding disengagement, whether it's while they work from home or just something general around the company. It's the best way that I've seen to roadmap what you can do differently to improve the engagement and culture of your company, which ultimately measurably improves productivity as well. And the final, I hear now a lot of frustration with leaders and CEOs of companies that we want our staff to be in the office so I can see them doing work. I need to see that they're actually working. But at the end of the day, you don't really care about how much work they do. You care about the results from the work. So the concept of implementing a scorecard for every individual so that you know what results are expected and manage the company and the staff in that fashion, I think puts everybody in a much easier way of working together, even when it's from home, because you're not going to be able to monitor their work from home, but you can monitor the scorecard. Now, vendor selection. So small, medium businesses, I think, are frequently challenged with selecting vendors. And there's a couple of things that I'd like you to consider. First, consider the relationship of this vendor and if you might have anyone that can recommend you to a vendor that they've received similar service from. If you're not able to find that recommendation from someone you know, there's a tremendous amount of sites online and third parties that collect in a trustworthy fashion feedback, review of vendors that are out there. One of my favorites is clutch.co, but there's a lot of different ones out there. So if you have to, that's a great secondary source for recommendations. Second, consider the overall value that you get. I know it's easy to look at 3 vendors and just pick who's the cheapest, but consider what the total cost of ownership would be, or total cost of this relationship would be from the vendor. So I'll give you an example. You can buy the cheapest car that's out there, and the day that you purchase it, it sounds like a great decision. But as you consider the maintenance that you have to put into it year over year and take a look at that total cost of ownership for that car, I'm going to guess that you probably made the wrong choice. So always consider that total cost of ownership, include every aspect that you think would be impacted from this vendor so you can understand and compare for the best value.
Now we're going to get back to the real title of our presentation. How do businesses bleed money? And we're going to talk about the money part. Cash management is critical. Understanding and controlling how your cash is flowing in and out of your business, you can really lose a lot in little dribs and drabs, not necessarily one huge fraud, but little things going on that you might not notice until you realize that, hey, I'm down a lot of money. Couple ways to control it, and one of the keys here really is to have a good relationship with your bank. But one thing is, consider a lockbox. If you're getting a lot of checks for receipts from customers that owe you for outstanding receivables, if you have a lockbox through your bank, the checks go directly to the bank summarizes the deposit and then sends you a report. This eliminates the risk of checks coming to your office and someone there either pocketing the checks and re-endorsing them to themselves, or a check falling behind a desk and no one notices it and it just never gets into your system. Another system that banks offer is called the remote deposit capture. That's a little machine that they put in your office so that you can actually run checks through this little mini scanner and they go right into the bank. Now, you have the risk of the money coming into physically your office, but now at least you avoid the risk of having to have someone write up the deposit and carry it to the bank. What happens if there's a car accident? What happens if they're robbed? What happens if they just decide to take the cash bag and run to Tahiti? So this remote deposit capture gives you a little more comfort that at least the money that is coming into your office is actually making its way into your bank. Another thing to consider is risk of litigation. If you're in any type of business that has a high risk of litigation, I work with a lot of medical practices. Obviously, there's malpractice risks. Attorneys, certain contractors have a high level of risk. If you keep large balances in your checking account, especially at the end of the year, it may, and this is a may, but it may be construed if they ever decide to sue you, that their lawyers think it's more worthwhile to go after you because you may look like you have deep pockets. So I recommend that my smaller business clients try and clear out their bank balances to leave in whatever they need to cover their bills for the next few weeks or month, but then try and transfer out excess cash so it's not sitting at risk to look good to a potential future litigation plaintiff. If you think you have a lot of risk of outside fraud in your bank accounts, you may want to consider setting up zero balance accounts. The bank can do this for you, And what it is the bank keeps your account always at zero. And when a check is presented for payment on your account, they then pull the money from a different bank account. So when you're sending a check to a vendor, the check has your routing number and your account number on it. Anyone with those numbers can go on Amazon and have a field day, because that's all you need to get an ACH debit processed. So this gives you a way to control it, especially if you set up something like positive pay, where the bank will only pay what you tell them to pay. But it also means that your bank account doesn't have a lot of money in it. So if someone tries to commit a major fraud, they're not going to get anything. And then the last thing I recommend to clients along those lines is have separate bank accounts. Many clients, because their checks have their account numbers on them, use a different account for deposits from customers versus the account they use for vendor payments versus payroll. That way, when they're making their vendor payments or they're making their payroll payments, there's really no money in those accounts, and the deposits coming in are going into a completely different account. So again, it can minimize your risk if someone gets access to your ACH routing and bank account numbers. So again, I mentioned previously positive pay. That's a service that most banks offer, where you provide the bank every time you do a check run with a list of those payments, and they only pay and honor those checks that are presented if they're on the list. So it has to be positively identified before they'll pay it. If you there's a lot of fraud right now of people forging checks, of doing online transactions. As I mentioned, positive pay will protect you against that. You pay the bank a fee for this, but positive pay will protect you against this. And the other thing that's very common now is to use some type of an online bill payment service. There's various products out there. One of the big ones on the market is Bill.com, but I'm not endorsing any particular one. But with online bill pay, there's different controls set up in the system, including approval of checks. So instead of having a lot of paper check stock running around your office and going from person to person to person for approval, where a lot of people can see your routing number and account number, you log into the computer, you set up the payment to the vendor, your system will tell you who needs to approve what based on dollar thresholds and whatever your policies are for your own business. And then the online bill pay service actually pays the vendor. So your vendor is never getting your account number and your routing number. Some are even using card payments where they set up actually a credit card payment. So if you're paying something with credit card points, but you don't want a vendor to have your credit card number so they can go joy shopping, the card pay through the online bill pay service is protected, and they're not going to have your information. So I'm talking a lot about fraud and how fraud can impact your cash management. There are ways, even in small businesses, and most of my clients are small to lower mid-market clients. So they don't have a huge accounting department and a huge staff to be able to have completely separate people doing completely separate duties. But it's really nice to separate the responsibilities as much as you can. Make sure that whoever is actually writing the checks out isn't the same person that's doing the bank reconciliations, where they could change the information if they stole money. Make sure whoever's getting the deposits isn't the same person opening the mail, so that there's someone to check what came in the mail versus what actually got into your bank. I'm going to share a quick story here. I had a client that got a call from a vendor about a check that looked weird, and they sent it to the AP person who protected it, who approved it. And it ends up she was working with her boyfriend and writing fraudulent checks to a fraudulent company that he set up a bank account for, and stealing tens of thousands of dollars a month. But because the same person was doing it and approving it and the one the bank called, client didn't find out about it until many months after the fact. They finally found it with a video of the boyfriend depositing the check, and someone said, wait, that's her boyfriend. Make sure you have appropriate approval processes set up. If you don't already, you should always have thresholds that if a check is over X dollars, 2 people need to approve. And if it's over Y dollars, maybe 3 people need to approve. The key in any fraud seminar you'll go to is The typical, most popular version of a fraudster is the little old lady that's worked in the accounts payable department for 40 years and is a loyal employee that's never taken a vacation. That's because she's bleeding you dry and she's stealing and doesn't want anyone to catch it. It's always a great idea to insist that anyone handling your finances in any way involved in that process be forced to take mandatory vacations. That gives a chance for someone else to be cross-trained, and it's a great way to identify if there's any fraud going on. The other thing you might want to consider is doing a surprise test of these controls. You can do what's like an audit of your internal controls and really test, are people going to fall for the bait? If you turn in a phony invoice, is it going to get paid? And see if your controls are working the way you've designed them. So I had a case, which was my biggest fraud that I've seen in my 33-year career. I had a client that was trying to acquire a company. It was an event planning company. He was acquiring a pretty large and popular competitor who was looking for a retirement exit strategy. So he asked us to do due diligence on the company that he was buying. So we scheduled our due diligence, and then they called and canceled. And then we scheduled again. And this went on about 4 times. We finally get out to the acquiree company, and the controller there gives us their books and gives us some information. And 20 minutes later, comes in and gives us a different set of books. Said, oh no, there were mistakes, let's fix it. Oh, here's another one. So over the course of the day, we got about 6 different trial balances, which is what we use to test all of this. We actually walked out of there and called our client at 4:30 p.m. and said, we need to meet tonight, which again, I've never done in my career. Usually you do these projects, you write up a report, you meet with the client a couple weeks later, a couple days later. We called and said, you can't buy this company. Something is going on here. We need to figure this out. Well, the end result is this controller had stolen over the course of the last 18 months almost $3 million by faxing fraudulent wire transfer instructions to the banker and drawing on the client's line of credit. And he was forging the owner's name and putting it in the books as a loan payable to the bank, but taking the cash. Now, excuse me, he was putting in the book. He wasn't putting it in the books. I apologize, but he was just taking the cash. Now, the acquiring company, that company's external CPA was issuing reviewed financial statements that showed that the company had a 0 balance on their line of credit, where really they had a $2.8 million balance because of this fraud. The external CPA did a reviewed financial statement that went to the bank. The bank put it in a drawer. They never noticed that the financial statement showed a 0 balance for the loan when they really had a $2.8 million borrowing on that loan. So after our due diligence and after our bringing it to the attention of our client, this fraud was discovered. The controller was prosecuted, and I never heard the rest of it. But just a word to the wise, back to how Adam started. Make sure anytime you're doing any wire transfer, make sure your bank knows they need verbal authorization, not fax, not email. And you should have a double layer of authorization, because that is how this guy got away with this for so long.
I wanted to thank everybody for listening and letting us share the 7 ways that we've identified that small businesses bleed money. So please reach out to us if we can help. If you have any questions, some concerns, something you want to review with us, we'll be happy to help. Again, thank you, Laura Goodman, partner in CPA at FGMK, and this is Adam Radulovic, CEO of XL.net.